Good evening, everybody, and welcome to the February 26th edition of Lock in Your Successes Market Update and Position Update. Well, we had another up week in the Nasdaq this week. But before we get to that, let's take a look at the Russell because that's what we mainly trade. The Russell has been holding this resistance area. It's also been more or less holding its uptrend channel. We bounced off our 20-day moving average and continued up. For the week, I believe we are actually down slightly. But in general, this is an extremely bullish chart. A nice little correction here, and it looks like if I was looking at this chart by itself, I'd say, well, this thing wants to go up. We do have to take the other indices into consideration, however. And the first thing I'd like to take a look at is the leader, which is going to be the Nasdaq. We've been talking about this for weeks. We have an extremely steep channel here. As a matter of fact, we haven't seen a move like this that's held this far over the 20-day moving average for this long since before the the tech crash back in 2000. If we take a look back at a very long-term chart, like a 20-year chart on a daily level, we were getting these kinds of moves back here when we had the very vertical up movement of the Nasdaq. Let's see, back in December of 99, October of 98, October of 99, in June of 2000. Those were the largest moves we've ever seen in the Nasdaq when compared to their 20-day moving average. This one here being the single largest one. During that time period, we were getting these huge vertical moves. So the Nasdaq's capable of running that far above its moving average for a longer period of time than we have now. We're at about 400 points. On this move, we've had them as high as 1100, but it would be, like I said, it would be very rare and would be before the crash back here. What I'm trying to say in short is that we are extremely overextended. Can the Nasdaq keep going? Yes, it's proven it has, but that was over 12 years ago. I don't know if the economy is that strong. Maybe it is, but given the extent of this run, I have to be very cautious if I was going to take long positions at this point. I would be very concerned. We really have no support here. Like I said, the biggest, this trend line here is so steep it's not really that valid. This 20-day moving average is even pretty steep, but I'd like to at least see a touch of that before I went bullish again on the markets in general. But we'll have to see how that goes. So the Russell chart looks very bullish. The Nasdaq chart also looks very bullish, but it's also very overextended, which gives me caution to the upside. If we come in here and take a look at the SPX, a lot of the your gurus here on the swing trading and stuff are saying, well, not Russell, but the SPX has broken resistance, and I say, well, no, it hasn't. First of all, resistance is an area. We have highs here. If you look at intraday high of 1370, we're only at 1365. I wouldn't say this thing has broken resistance until we get a decisive close over that. So, at this point, I'm saying the SPX is at resistance. The Russell is at resistance. The NDX is just blasting off like a rocket ship. I would have expected if it was going to run to have a stronger move. This is clearly, it's above its resistance area, but it's not terribly strong of a move here. Unless we see something this week, I'm not that concerned about this little breakout. The Dow, however, if you take a look at that, has clearly cleared its resistance area, and so the Dow is bullish as well. So we have two bullish, we have two at resistance. We have the general opinion of most of the gurus saying, the charts too. The charts are saying, hey, bullish, bullish, bullish. And when everybody's that bullish and we're that overextended in one of the indices, I have to be leaning slightly bearish. I have to be a bit of a contrarian. And I know I've been saying this for 3 weeks, but the markets have continued to go up, yes, but not very much. They've just been really, really creeping. We haven't really gotten anything significant in the last 3 weeks. The Nasdaq really hasn't consolidated yet, and I'm thinking that's got to happen. So I still, if I have to put it on a 1 to 10 bearish scale, I'm probably a 3. I'm only a 3 because, like I said, we have two bullish indices, and even though we're at resistance with the Russell chart that looks very bullish, the SPX chart is at resistance as well. It doesn't look as bullish. It looks like this could still consolidate again. So we get, as usual for the last month, we have very mixed signals, and I'm slightly to the bearish side. I think you have more risk to the downside than to the upside at this point. Okay, so that's what I think in the markets. Now, as far as our trades, I did enter the bearish butterfly for April on Friday. As scheduled, it was 56 days from expiration. I got into this 850, 800, 750 put butterfly for $10. There was a huge price difference in the 800 versus the 810 butterflies. And, I don't really like to pay a whole lot more than $10 for my entry. I'm a little on the bearish side, slightly bearish. So instead of going for the 810, I opted to go for the 800. And that will make our reference point 800. So if I have an 800 reference point, that means I add to this at 840, and I add again to 860. I really, really like this trade setup this month. Like I said, I'm slightly bearish, but the markets just want to keep pushing. Therefore, what I'm hoping for is I hope they do keep pushing. I really hope that Nasdaq holds this channel for a little while longer. I hope that that Dow continues to climb. And we get a bit of a breakout in the SPX, because what's going to happen then is if we get a breakout in the SPX and the NDX continue to climb, that will push this, we'll hold this channel, and that will push us up near the new high areas, which we have an all-time high on the Russell of 868. If we come up to 868, this position will be in 800. 820, 840 butterfly. If we come into 868 and we finally get our retracement, and we retrace our primary trend line, which is down in here somewhere, then that means at expiration we should fall somewhere in the 820 range, and at that point we'll be perfectly positioned in this bearish butterfly to take advantage of that. Now, if Russell pops 870, we have another roll point, which is going to put us into an 820, 840, 860. Again, at that point we're going to be so overextended, not terribly concerned. We're still likely to end up down in here somewhere for our trade, and even if it holds the channel and continues up, as long as we hold this channel and don't break up over the top, I think this trade's going to stay with it. So I really, really liking this trade this month, and those are my reasonings behind it. And as you know, or if you've been looking, I got out of the March bearish butterfly earlier in the week. We were 21 days from expiration, or 22, depending on if you're using the TOS numbers or the option view numbers. It was the morning, and we were well over our profit target. The market was looking a little bullish, so I went ahead and pulled out of that for a profit in the 15% range. Like I said, our high profit target was 30. Our 21-day to expiration profit target was 10. We were up 15. I thought it was a good time to get out. It's because the markets have been so bullish, and they're just not really wanting to pull back. So we take the risk off the table, take our money, and go ahead out to April. And like I said, this is a trade that I really, really like this month. As far as the M3 trade, the March M3 trade is still open. It looks like this. We have, let's switch back to Russell quickly. We have a 790 butterfly. We have a 68 IWM call. and we have a 790, 800 vertical. Our Greeks look good. Gamma is a little higher than I'd like it, but there's just not much I can do this close to expiration with the volatility this low. But this position looks good. Especially if we drift back into this area here and hang out here for a while. We have a $500 profit target. If the market makers believe that the market's going to settle in this area at all, that profit target should come relatively quickly and we can get out. If we continue to creep up here and want to test this 870 area, then we should be able to hold it, hold the trade till that far, as long as it backs down towards Mark's expiration into this 860 to 850 range. We'll do some adjustments and stuff, but no big concerns here with this one. It's looking good. I have not entered the April trade yet. I'd like to see how this resistance area resolves itself, and if it then make a decision. So everything looks good, and that's our trades for the month. I will keep you updated as things change. I hope you have a great week, and I'm sure I'll be updating at some point before the end of the week. Thank you, and happy trading.